Is it melt up or melt down for stocks? Let's take a look at the technicals to see where the market may be headed. Let's start out with the S&P 500, looking at the breadth indicator, the percentage of stocks above their 50-day moving average. Now remember, when stocks are below their 50-day moving average, that's a bearish condition. That means momentum is headed lower and likely price is headed lower. And right now, almost 60% of the S&P 500 is below its 50-day moving average, which generally means people are likely to buy. And sure enough, we see down here a -2 standard deviation on the 1-year chart. We saw it back in late January. What happened? Buyers came in and price rallied, but that rally fizzled as momentum and breadth turned over, and now we got back down to a lower level. Around 25% of the S&P 500 stocks above their 50-day moving average, what would be a very clear buying signal for most traders. And sure enough, they came in and bought, sent prices higher on Friday. The question is, can they hang on to that momentum, or is it just going to be a false rally? Let's go out to the 200-day moving average. Now, when you see the percentage of stocks here below their 200-day moving average, that means they're in a bear market generally. And what do we see? Half of the S&P 500, so 250 stocks, are in a bear market. Now, we've got a below a -2 standard deviation event. We had not quite 40% hit back in late January, and now just below 40% of the S&P 500 being above its 50-day or 200-day moving average. And without surprise, it got bought, and sure enough, they sent prices higher. But now, from a historical perspective, is this indeed a buying opportunity? Well, yeah, normally it is. In fact, you look back here, our current condition, but go back to, say, to around 2019, it got here. Now, it did go lower, but that certainly was a buying position. How about in about late 2010? Yeah, it was a buying position there before actually stocks went down a little bit more, but sure enough, they was a buying condition. You see here going into the great financial crisis, it was a buy the dip, and price did go up afterwards before the equity markets melted down. So there's a number of indicators that would suggest why people are buying here, and they should if they're strictly basing their decisions on a technical picture. How about the relative strength indicator? It's validating a buy signal too. It's now over 40. And making its way over 50, at least that's what its targets now are going to be. But remember, it's got to get over that 50 number to really have some validation. But it went from an oversold condition in late January. We didn't quite get to an oversold condition here last week, but it got close enough that when factoring the breadth indicator, yeah, it was a buy the dip opportunity. How about the MACD, which is a little bit lagging indicator? So we see the MACD line in black looking upward to cross the signal line. And we're not there yet, but you noticed before it crossed that in, again, late January, along with the other indicators, provided a nice rally before momentum faded out. And now it's got its upward sight. It's got a nice little hook there. Will it have enough momentum to push it up? Well, price has got to head higher into early next week to drive that signal line up, or the MACD line through the signal, that shorter term moving average up. And if that gives you, you've got validation there. Now, I want to announce that Momentum Time Pro version 6.0 is coming out, and this is a preview. So if you're not on the list, you may want to, because what I've done over the weekend, in addition to the normal Momentum Timer Pro proprietary momentum algorithm, it now also factors the relative strength indicator and the MACD, and says two confirming signals have to either be validated to give it a buy signal. The whole algorithm, everything's been updated. The report's been updated. So if you're not on it, again, it's free. I'll put a link in the corner above and in the description below. So now the S&P has 6 consecutive sell signals, meaning there isn't confirmation between the 3 signals. And we know one of them is, and that's the RSI, and it's not enough to drive a buy signal yet on the S&P 500. And we're hoping this change makes Momentum Timer Pro one of the most comprehensive reports for looking at the technicals across a broad range of ETFs very quickly. How about we look at the longer term picture? Now let's look at the moving averages, and what do we see? Price on all the moving averages through the 21 through 100 day are head lower. They're bearish, and momentum is trending down. So that is a bearish picture. We're not seeing a bottom in the moving averages yet. Price has just jumped above the 9-day moving average, and that's not a big deal, but we're starting to see that move higher show up in the MACD. 1, 3, and 6 month momentum still remain negative, suggesting that momentum algorithms are not going to be buying into this just yet. Let's take a look at the charts. because they're pretty interesting. What we see here now is you've got the 6-month volume profile and overhead position. So it came down, price came down into the supply zone, and it's trying to get into the supply zone here and see if those former sellers that were right just here a couple days or week before are now going to flip back to buyers. And that's what you see in supply zone. So you see down here, definitely a buy zone. At the moment, this is a sell zone, but if there's enough momentum here, you could see the S&P 500, or as we're looking at the SPY, at least get up to its 21-day moving average, maybe even its 200-day moving average. And there's the volume here isn't as heavy as before, giving some opportunity to push up through there before it gets to the 200-day moving average, where you see there's a bit of heavier volume. Now, what's notable is if we look at the last 10 days, all price did was shoot up right into where the heavier chunk of volume on the 10-day profile was. But let's zoom out to the 1 year. And you notice it's just above there. Now, just because it's just above or below right where most of the volume is traded, it's still in a heavy zone. So definitely price has to break through here, because there's now potentially a lot of sellers that are showing up. Remember, we had buyers down here. Now people are perhaps turning into sellers. Let's look at the 2-year chart, and wow, they're right there at the same mark. So all the activity, all the actions going on right now, making next week's moves very critical, with all eyes being on, of course, the futures when they open. Let's go on to the NASDAQ 100, and what do we see here? A clear bearish picture. So momentum is definitely broken here, because look at the breadth. We see percentage of the NASDAQ 100 stocks above their 50-day moving average of 21. So nearly 80% of NASDAQ stocks are in a downward move. They cross below their 50-day moving average. It's bearish, and it doesn't mean they're in a bear market. It's just very bearish for price. But what would you expect to happen at these lower levels? Well, we saw what happened down here in October. It got down to the same level, minus 2 standard deviation event. People bought it. Got there down here in late January. People bought it. Here it is again. And of course, when it gets down here, people are going to buy, hoping that other people are following them. Let's look at the percentage of the NASDAQ stocks above their 200-day moving average. And now we see 2/3 of the NASDAQ is in a bear market below their 200-day moving average. There's not a lot of momentum here, but again, at a -3 standard deviation event, what would you expect? People to come in and buy. They're hoping the worst of this is now gone. Is it? It's just too early to call with all of these geopolitical events, but you can see now why people would buy here. They bought now. They bought roughly in this zone back in early 2020. They bought it back in 2015, 2016, 2011, late or early 2008, and each of those times prices did go up some. So obviously there's a reason they're buying this dip, hoping for a melt up in tech stocks, because, well, they're pretty beaten down and they're pretty oversold according to the RSI. We had that oversold condition late January. Now we just didn't quite get to, official oversold condition, but now it's back over 40, giving you a preliminary signal that, yeah, there's some, from a technical perspective, the RSI is flagging a potential buy signal. How about the MACD? Well, we don't see the MACD line crossing yet, but you'll notice it's getting close to that signal line, providing perhaps some upward momentum. But the issue is, can price break out of this downward trend, or is momentum going to roll over? How about Momentum Timer Pro? Now, again, using 3 signals. Again, this is a preview of Monday's report, which will come out Monday morning, and still showing sell signals. So we know the only one that's just like the S&P 500, the only signal it's got on the positive side right now is the RSI, giving an early potential signal of a buy. So stay tuned to that report. How about the NASDAQ 100? Here we go. The longer term picture, the moving averages are down. That's no surprise. Momentum on the 21-day now is pulling upward, a little bit of bullish. It's above his 9-day moving average, which we again saw in the MACD. But still 1, 3, and 6 month momentum all negative, below price where it was before. Momentum algorithms are going to stay out of this picture. Let's take a look at the Qs and see if we got a nice picture here, and look at the 6-month volume profiles way up here in the sell zone. And now you've got a sell zone here. And how do you know? Because price came down and hit a zone. This is a buy zone right here between, say, 332 and 340. Prices came up into this zone, got sold, and then prices came back up, got sold, validating that this supply area is now a sell zone. Price came back through the buy zone to another buy zone, and then came back all the way through. So now price upward momentum is tracking the 21-day moving average down, giving you kind of some suggestion, and you can see where the volume starts to pick up here. The price has got some upward mobility into the 21-day moving average. Again, due to geopolitical events, who knows where the futures are going to open on Sunday. But nevertheless, from a tactical perspective, there's definitely upward momentum here in the charts. Let's zoom out to the 1 year and see the headwinds. You can see the headwinds are moving down now, where sellers are starting to come in at lower and lower levels and get out of this market. You see the 2 year volume profile right there as well. Same location right below that supply zone. So suggesting, again, there's some upward mobility in price from a trading perspective, but look at the 10-day volume profile. It just kind of ran right into a halt there. So traders are buying this, but looks like some big players are getting out at this point. Let's go on to small caps. And small caps are important because they lead the large caps. And now you see that 1/3 of the Russell 2000 is above his 50-day moving average. So that means 2/3 of it, momentum is trending lower in a bearish condition. Not in a bear market, but just when you see, again, it crosses the 50-day and it heading below the 50-day, that is bearish for price. You want to see it above that, but note it's at -2 standard deviation event. It bounced off of that. Again, people are going to buy this every single time it comes down here. The question is, do they have the momentum to take it through? And that is key because it didn't have it last time. So there's a big test for the Russell 2000 coming early this next week. How about we look at the percentage of Russell 2000 stocks above their 200-day moving average? Now we see the same picture, only 1/3 are above their 200-day moving average, with 2/3 in an official bear market below their 200-day moving average. And despite being down here with only 30% of the Russell 2000 above its 200-day moving average, there hasn't been enough buying, as some are getting bought and others are getting sold, to really put any momentum behind this, suggesting that this rally is likely to fizzle out. How about the longer term trend? Should this be bought? Absolutely. You can see other times this has provided nice buying opportunities. But the question is, will it hold or roll over, melt up or melt down, as a headline of today's show? How about the RSI giving a positive indicator now back over 40? It's got to break through this 50 level to really get some momentum behind it. So far, it hasn't been, again, putting the test to the small caps early this week as buyers need to take prices higher. How about the MACD? Well, it was rolling over. Remember, we talked about this last week and it looked like it was going to cross to the downside, and it briefly did. And now it's trying to push up. There's not a lot of momentum behind it. And we've seen instances before where we had a nice cross, looked like price was going to rally, and then it fizzled out. And you see it here where price just fizzled out. So again, big test for the Russell 2000 coming up. But of course, there's a buy signal because you already now know that there's a minimum two confirming signals. MACD saying yes, it's the MACD line's above the signal, and we've got, of course, the RSI above 40, triggering a buy signal here on Momentum Timer Pro. Again, preview of the Monday report. Let's take a look at the longer term picture. Now the 21-day moving average is turning up. This is a good sign. You want to see the shorter term moving average turn up. You want to see momentum building behind them. And it's no surprise. You would not expect the 50 or 100 day to be turning up yet in a potential bottoming situation. Price now above the 9 and 21 day moving averages. So those are good signs. Let's take a look at IWM, see what's going on from a price perspective, and see if the picture is even better. And from a volume profile, you got a lot of sellers way above here, but notice the moving average. So you see the 21-day in red is starting to form a bottom. Again, this is what you want to see. Prices come down again, perhaps double bottom, and then try to move their way up. So what is the next likely destination for IWM is going to be the supply zone that's sitting right here. It's going to go after that 50-day moving average, because why? You got to cross to the downside of the 50-day, confirmation to the downside of the 50-day. So momentum now is bearish. You need to get above the 50-day and get it turned upwards. Let's zoom out and see again the 1 year chart. You've got a lot of selling up there unchanged. Let's look at the 2 year chart. That's unchanged. What's again the risk here to IWM is it comes up and hits the supply zone. Remember, you had all these buyers. The question is, are all these buyers willing to come back in and buy some more, or do they flip and turn to sellers when their initial purchase price is at parity with current price, and do they turn into sellers and then this flips and rolls over? Again, way too early to call. Let's zoom into the 10-day, and like the S&P 500 and the NASDAQ 100, prices are now sitting right around its 10-day volume profile. So we'll see if this fizzles out or not. And let's take a last look at high yield bond market. RSI now at 48 and moving higher. So this is a good sign. When you see junk debt, junk bonds start to perform well, that's a positive indicator for the broad indices. It went from oversold condition and finally broke out. How about the MACD? Nice positive signal crossover. As far as momentum time, bro, you have to sign up for the report to see what it says. But look at this, 21, 50, 100 day, all still bearish on the price. Momentum still bearish, but now it's above the 9 and 21 day moving averages. So some potential validation now on the RSI and of the MACD. Let's take a look at the price charts and see what investors are up to with junk bonds. And they're buying this, and they're buying this aggressively. They like this picture here. You see there, cross over the 21 day. Too early to call an actual bottom because you need to see prices actually kind of form a bottoming pattern. Usually they're not just a spike. That's very unusual, but it could be. Let's zoom out, and what do we see? The bigger picture here is the risk to high yield bonds is they see price driving up into this supply zone, which is now a sell zone. Before it was bought and then stayed above there and now just broke through. That if it gets rejected up here where you see prior buyers can turn into sellers, or just a lot of companies issuing more high yield debt into the market, you could see price roll over and head lower. And at that point, there really isn't a lot of support below. You see support down here around 78, 79, and then you could potentially see this prior support here at 82.51 break through to the downside. So a lot of risk to junk bonds, but the early next week we'll find out as soon as the futures open. And with that, well, melt up or melt down, you've got me. There's no conclusive evidence in today's chart because you can't outweigh what's going on in Europe right now. Thanks for watching. Bye now. The content of this video is provides educational information only, is not intended to provide investment or other advice. So you don't have to be construed as recognition, solicitation, embarrassing security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre, Professor Cassie. Opinions expressed in this video that do not affect the value of advising or Steven Van Metre Financial.